Good morning, and thank you for tuning into today's episode of our daily crypto news podcast. We're kicking off the day with a look at some of the biggest market-moving stories in the world of cryptocurrency.
That's right. One of the key stories we're following is Bitcoin's post-Fed price dip, which is now extended into its third day. The price has dropped nearly 10% from record highs, but as we'll discuss, there might be a glimmer of hope on the horizon for BTC bulls.
So yes, according to a recent analysis, a key contrary indicator has been activated, which has historically marked the end of price pullbacks. This could signal a renewed upswing for Bitcoin, potentially pushing it back into six-figure territory.
And that's certainly a development worth keeping an eye on. It's worth noting that this indicator has flashed green in the past, and more often than not, it has been a reliable predictor of an upcoming price increase. However, as we always caution our listeners, past performance is not a guarantee of future results.
Absolutely. Moving on to another story, we're seeing some regulatory headwinds for Worldcoin, the crypto-based digital identity project co-founded by OpenAI CEO Sam Altman. German regulators have cracked down on the project, citing concerns over biometric data and compliance with European Union data protection laws.
That's right. The Bavarian State Office for Data Protection Supervision has launched an investigation into Worldcoin's flagship technology, the World ID, to determine whether it complies with GDPR standards. This is not the first time Worldcoin has faced scrutiny, but this latest development could have significant implications for the project's future.
This raises some interesting questions about the intersection of cryptocurrency, digital identity, and data protection. We'll be exploring this theme further throughout today's episode, including the potential implications for other cryptocurrency projects and the broader regulatory landscape.
And that's not all. We'll also be discussing the potential impact of the Fed's recent decisions on the cryptocurrency market, as well as some of the other key stories shaping the narrative around Bitcoin and other digital assets.
It's shaping up to be a fascinating conversation, and we're excited to dive in and explore these topics in more depth.
Yesterday, we touched on the challenges faced by blockchain companies in maintaining transparency and trust with their users. It seems like that conversation is even more relevant today with some surprising news from Aptos Labs.
That's right. The founder and CEO of Aptos Labs, Mo Sheikh, announced that he's stepping down. In a statement on Twitter, Sheikh expressed his passion for building fairer and more open systems, but didn't provide a clear reason for his departure.
This is definitely a significant development, especially considering Aptos Labs' focus on creating a more scalable and user-friendly blockchain. Sheikh's vision has been instrumental in guiding the company's direction, so it will be interesting to see how they move forward without him at the helm.
So building on what we discussed earlier about the importance of transparency, it's worth noting that Aptos Labs has been relatively open about their goals and challenges. However, the sudden departure of their CEO does raise some questions about the company's future plans and leadership structure.
Speaking of transparency, a recent report from Blockade highlights the ongoing issue of malicious crypto tokens. According to their findings, almost 60% of new crypto tokens launched in 2024 were malicious in nature.
That's a staggering number, and it's clear that the problem of crypto scams and fraud is still a major concern. However, it's worth noting that the amount lost to these scams actually decreased from $5.6 billion in 2023 to $1.4 billion in 2024.
While that's a positive trend, it's still $1.4 billion that's been lost to malicious actors. The report from Blockade emphasizes the need for greater awareness and education among crypto users, as well as more robust security measures to prevent these scams from happening in the first place.
It's a complex issue, but one that the crypto community needs to address head-on. By promoting transparency, accountability, and security, we can work towards creating a safer and more trustworthy environment for users.
And that's where companies like Aptos Labs come in, with their focus on building more secure and user-friendly blockchain solutions. While Mo Sheikh's departure is a significant change, it will be interesting to see how the company continues to evolve and address the challenges facing the crypto space.
Absolutely. As we move forward, it's essential to keep a close eye on developments in the crypto world and to prioritize transparency, security, and user trust above all else.
Building on what we discussed earlier about the growing interest in cryptocurrency among institutional investors, the SEC has just approved the first hybrid Bitcoin Ethereum ETFs. This is a significant development, as it opens the door for more investors to gain exposure to both assets in a single fund.
That's right. The Hashdex NASDAQ Crypto Index US ETF and the Franklin Crypto Index ETF are the two funds that have received approval. They'll be listed on the NASDAQ and Cboe BZX exchange, respectively. What's interesting is that these funds will hold a proportion of both Bitcoin and Ethereum, which could provide a more diversified investment opportunity for investors.
This approval has been a long time coming, with the SEC conducting extended reviews since June this year. But now that it's been given the green light, it'll be interesting to see how these funds perform and whether they attract significant investor interest.
Speaking of attracting interest, Formula One has just secured a multi-year renewal with Crypto.com, extending their partnership through 2030. This deal was first inked in 2021 and marked Formula One's foray into the world of cryptocurrency.
That's a great example of how cryptocurrency is becoming increasingly mainstream. Crypto.com has been the title sponsor of the Miami Grand Prix since its inception in 2022, and this renewed partnership will see the exchange platform continue to feature prominently at key Formula One events.
This partnership is a win-win for both parties. Formula One gets to tap into the growing popularity of cryptocurrency, while Crypto.com gets to reach a massive global audience through its association with one of the world's most popular sports.
And it's also worth noting that this partnership is part of a broader trend of sports teams and leagues partnering with cryptocurrency companies. We've seen similar deals in the NFL, NBA, and other sports, and it's likely that this trend will continue as cryptocurrency becomes more mainstream.
Absolutely. As cryptocurrency continues to grow in popularity, we can expect to see more partnerships like this in the future. And with the approval of these new hybrid ETFs, it's clear that the momentum is building for cryptocurrency to become a more integral part of the financial landscape.
And that's all for now. We'll continue to monitor these developments and bring you updates as more news breaks.
And don't forget to tune in tomorrow for more crypto news and analysis.
So we were discussing the recent dip in the crypto market, and it seems like it's having a ripple effect on major investors as well. I came across a story about Cathie Wood's ARK Invest selling off nearly $4 million in Coinbase stock.
That's interesting, considering Coinbase is one of the biggest crypto equities out there. What's behind this move, do you think?
It's likely a response to the current market conditions. With Bitcoin and other cryptocurrencies taking a hit after a period of massive gains, it's possible that ARK Invest is trying to minimize their losses or rebalance their portfolio.
That makes sense. We've seen this pattern before where investors get cautious during periods of market volatility. And Coinbase's stock price has taken a hit as well, dipping 2% to $274 per share.
Exactly. The ARK FinTech Innovation ETF offloaded 13780 coin shares worth $3.9 million, according to data from Wednesday. It's a significant move, and it'll be interesting to see how this affects the market in the coming days.
And speaking of market movements, I saw that the Fed has dashed hopes for a quiet Christmas in the crypto market. What's the latest on that front?
Yes, the Crypto Daybook Americas had a piece on that. It seems like the Fed's recent actions have stirred up the industry, and we can expect some developments in the day ahead. Unfortunately, it looks like we won't be getting a break from the market volatility over the holidays. Nathaniel the Lanza Bonin was the author of this article.
That's true, and it's worth noting that Crypto Daybook Americas will be on hiatus for 2 weeks starting Monday, so we'll have to keep an eye on other sources for our daily crypto news fix. But in the meantime, let's keep an eye on the market and see how it reacts to these recent developments.
Absolutely, and we'll be sure to keep our listeners updated on any major movements or news over the holidays. It's shaping up to be an interesting few weeks in the crypto world.
Definitely, and who knows, maybe we'll see some surprises before the year is out. We'll be back with more news and analysis after this break.
It's been quite a day in the crypto world, and we've got a lot to unpack before we wrap up. Earlier, we touched on Curve Finance founder Michael Egorov getting liquidated again as CRV slumps. This liquidation, worth around $880 to $2,000, came after CRV dropped by 12% on Thursday.
And it's not the first time Egorov has faced a significant liquidation. What's interesting here is how he's framed this event, tying it back to the Yuwu hack in June, and essentially positioning it as a consequence of Sifu's promise to repay the hacked funds.
Exactly. It's a clever spin, but it does highlight the ongoing challenges Curve Finance is facing. We've seen the total value locked on TVL on Curve drop from $3.5 billion to $3.25 billion. That's a decline worth paying attention to, especially given the broader market context.
Speaking of which, the mood in the crypto market has certainly soured, hasn't it? Dogecoin's 11% drop is leading losses in crypto majors, and even Bitcoin isn't immune to the downturn. We're seeing losses extend into their third straight day, which is a stark contrast to the bullish sentiment we've seen in recent weeks.
QCP traders attributed this crash to the market's overly bullish positioning in the past month. It's a timely reminder that sentiment can shift rapidly in crypto. A drop in Bitcoin in particular is noteworthy, given its otherwise bullish period.
And what this tells us is that the market was perhaps getting ahead of itself. The enthusiasm and optimism we've seen recently might not have been entirely justified, and now we're seeing a correction. The question is, how deep will this correction go?
It's also worth considering how this impacts the broader DeFi space. If Curve is facing challenges, and we're seeing significant liquidations, what does this mean for other protocols and platforms? Are we looking at a period of consolidation, or is this a sign of deeper issues?
Well, one thing's for sure. The crypto market is never dull, especially around the holiday season. As we head into the weekend, it's essential to keep a close eye on these developments. The key takeaway from today's stories is that even in a bullish market, corrections can happen, and it's crucial to stay vigilant.
Absolutely. And as we wrap up, our final thoughts are that caution is warranted in the short term. The market's sentiment can shift quickly, and it's essential to be prepared for any scenario. Despite the downturn, the fundamentals of crypto remain strong, and we're excited to see how the space evolves in the new year.
And that's all for today, folks. Thanks for joining us on this daily crypto news podcast. We'll be back on Monday breaking down the latest stories and trends in the world of cryptocurrency. Until then, stay informed and happy holidays.